Hi, this is Mike Maloney, and I wanted to do a quick video and ask the question once again, are we in a recession? Are we headed into a recession? Well, history says that we've got to be headed into a recession sometime or another. They always come along. The average period is about 5.5 years, but you don't see an economic expansion longer than a decade, and we're already more than 7 years into this economic expansion. But I went again to the Federal Reserve Bank of St. Louis Economic Research Division and looked up a few charts that I just want to show you here. And this one is an industrial production index. So it's industrial production and it's data going all the way back to the year 1920. I love historical charts like this that give you true perspective, where you can really take you can see what was going on over a very, very long period of time. And we've got, there was the top here in 2000, another one in 2007. But what I find interesting in this long-term view is you can see the angle of increase in our prosperity. We were producing more goods and services. This is industrial production, but services goes along with this. But we were just producing more, consuming more. Our lives were getting better. And that sort of peaked in 2014. And if you look at the angle, it was a very sharp incline here. And then just a little bit higher level in 2007. But then we had the global crisis of 2008, and we've barely gotten back up to where we were in 2007, so it sort of looks like a double top. It hasn't been a very healthy economic recovery at all, mostly because it hasn't been a real economic recovery. It was a smoke and mirrors thing done by Ben Bernanke, where he made a gift to the banks of a whole bunch of base currency that sits on their balance sheets and pumps up the stock markets, but it doesn't flow down to Main Street. Now, the thing I like about these interactive charts is I can zoom up on any area that I want, and what I find interesting here is looking at this top. Here we were in November, December of 2014. That coincides with the tapering that Janet Yellen did. And so we sort of turned off QE, and here we've been falling since November of 2014. Now, if I go to manufacturing sales, that looks a whole lot like industrial production. I mean, there's variances further back in the chart, but the top that we've just put in, they're pretty much tracking each other. And then if we go to rail freight carloads, now this is a real measurement of economic activity in any country, is how much freight is being sent back and forth across the country. That's the stuff that you're going to be selling. And what you see here is this was fairly steady at 1.4 million ton miles. And then with the crisis of '08, a very sharp contraction, and it never got back up to those levels that it was at back in the latter part of the last century and then the early part of this century. So we fell from 1,400,000 ton miles to 1,250,000 ton miles roughly. But since, let me get the top there, December of 2014, it has been falling off a cliff, and it's now down at levels that it was at the very bottom of the global economic crisis. And so that, to me, says that we're in recession. But let's go dig just a little bit deeper than this. This is delinquencies on all loans and leases. So people that are late on payments of their loans and leases, commercial and industrial, at all commercial banks. And what we see here is a cycle based around the recessions, and we're headed up once again. I have a feeling that when the Federal Reserve and the people that put all this data together, when they finally declare a recession, we're going to find out that we're already in a recession right now. So that's my take on things. Please like and share this video if you feel that you got anything from it. Thank you very much, and we'll see you next time.